Special update, it is Monday, right now 7 p.m. Eastern Time. The United States has officially labeled China a currency manipulator. All hell is breaking loose, as you could imagine. A lot of panic out there today. We already had a 750 point drop in the Dow. Dow futures are down another 360 points right now, so that's well over 1,000 between today and what is happening this evening in reaction to China being labeled a currency manipulator. Look, we've known this for a long time. Everybody knows that China has managed its currency exchange rate. It broke through the 7 threshold, which was for a long time kind of considered the line in the sand. When that happened early this morning, there was the expected reaction, which was panic. I do not see this as necessarily any big deal, but I could understand the markets being completely unnerved by this. Now, we can really go back to where this began with last Wednesday's surprise by the Fed. Not the rate cut, that was expected, but the announcement that they were going to end balance sheet roll-off without any telegraphing of that whatsoever. Now, the reason why that is a key factor in this whole entire debacle that is going on right now is because banks were expecting another 70 billion of roll-off through the end of September. So now the banks, or I shouldn't say now, but last week, the banks had to adjust suddenly to this new situation where an additional 70 billion of reserves now will remain in the system. So what happened was that triggered risk asset sales by the banks. Everything started to dump last week. That was a terrible, terrible an unforeseen move by Powell and the Fed. Again, I will repeat, I don't know how many times I've said this already, but the Powell Fed is the most it goes beyond Volcker at this point, the most clueless Fed that I have ever seen, at least in my career. And that's 40 years of being in the market. So now let's talk about the China situation. First of all, if we step back and we look at the big picture with respect to what has been going on for the last 18 months with this so-called trade war and the tariffs, you know, Trump has enacted tariffs on a quantity of Chinese goods, what was it, like 250 billion. There's a 25% tariff. He's going to enact 10% tariffs on 300, the remaining 300 billion. After that, it's done. The entire import quantity of China that China exports to the U.S., what we import, will have imposed upon it tariffs. The U.S. economy has weathered that very, very well. I won't say there hasn't been any negative reaction to that. There has. We see growth has come down from 3% to 2%, and we see that the main drag on GDP is indeed net exports, which has gotten more negative, all right, as a result of this trade war. But we're still running above 2% GDP, which is respectable. Okay, we had 3.2% in the first quarter, we got 2.1% in the second quarter. We're probably somewhere in the middle there, so that is respectable. In the banking metrics, which I get every week and which I publish in my report, MMT Trader, which, by the way, the new issue is out today. If you want to go to pitbulleconomics.com. All of the banking metrics in the latest week were very, very strong. Bank credit up by the most in 3 months. Commercial and industrial loans up by the most in 4 months. So no sign in industry that there is a contraction in demand. Real estate loans up by the most in 4 months. Consumer loans up by the most in 3 months. Auto loans, 32 weeks in a row we have seen increase now, and the rate of growth in auto loans now the fastest in 28 months. I can go down the list, and I'm telling you, if there was negative impact to the economy, you would see it in these banking metrics right away. you would see a contraction in credit demand. We do not see that. As a matter of fact, we see the opposite occurring. Now, these developments have just happened. All right, today with the Chinese currency passing 7 and all the turbulence that has caused, all the panic that has caused, and now tonight with the U.S. declaring China a currency manipulator. By the way, what does that mean? I went to the Treasury's website because what sort of consequences does that entail? The Treasury's website, and if you go there, there is a statement on the website right now talking about this latest measure declaring China a currency manipulator. It says that the Secretary of the Treasury will work with the IMF of all places to deal with the situation and try to adjust these imbalances or straighten out the unfair advantage that China has. So it's kind of nebulous as to what the consequences are. All it says on that statement is that the Treasury Secretary now must work with the IMF of all places. The IMF, of course, is, a U.S. controlled organization, has a tiny, tiny balance sheet, maybe 280 billion or something like that when you're talking about China with the second largest or maybe the first largest economy in the world, the United States largest economy in the world. So kind of like foggy as to what the consequences are. So again, I'm trying to see where is the hard impact? What will be the hard impact? We have seen, hey, by the way, right now the Chinese currency trading at about 7.11 to the dollar, 7.12. That's already about over a 3% depreciation from where it was before this whole thing got started. Before Trump said, hey, he was going to put another 10% tariffs on the remaining 300 billion of Chinese imports. So it has already discounted 1/3 of the tariff situation. In other words, Chinese goods have become cheaper by 30% of that 10%. All right. I am trying to see where the hard impact to the economy is going to come from. And frankly, I really do not see it. It is not showing up in the data. If you look today at the fiscal flows from the Treasury, from the daily Treasury statement, extremely strong. Spending is up 290 billion over the same time last year. That is a massive amount of fiscal support, and we still have 2 big months, August and September. September being a huge month, the end of the fiscal year, where you have a lot of spending that takes place. So I am trying to see where the hard impact is going to come from. Remember too, because this kind of got lost in all this chaos that's going on right now, next week, August 8th, and I said this over a month ago, probably 6 weeks ago, August 8th was the peak in reserves. We have been in this kind of a cyclical pattern. Reserve peaks equate to a buying window for stocks. Reserve troughs equate to a selling window for stocks. We had the reserve trough in early July. I gave the sell signal on that. Okay, I said it would be churning. It would be a difficult market to the upside. That is exactly what happened. And by the way, when I sent out my report last week, I said if the Fed cuts rates by 25 basis points, that is not going to be something that the market will like. It is going to give problems. And again, we had that surprise ending of roll-off. I don't know, this Powell, he's unbelievable, this guy. Terrible. Absolutely terrible. So that's where we are right now, folks. I do not see the hard economic impact. I do see the panic. I do see the crazy selling that is going on. The reactionary fear. I think people just see this stuff. They really don't understand it and they relax. And let me tell you, I'll just finish off with this. There are some really cheap stock bargains out there right now. I gave a couple in my emails today. Some really cheap stock bargains out there right now. By the way, one more thing I will add. The dollar is not rallying, which is a departure from its past behavior whenever we had these flare-ups in the trade war. There has been money flows into the dollar. This time it is not happening. I'm not sure if investors think that the U.S. is going to intervene to push the dollar down or whatever. Just pointing it out. The dollar is not rallying. All right, everybody. See you tomorrow. Bye-bye.